ETF, Exchange Traded Fund. This is the topic we're going to discuss in this video. An ETF is a collection of securities, for example stocks, that you buy or sell through a brokerage firm or a stock exchange. With an ETF, we keep track of a particular index that can be, for example, the SPDR S&P 500 ETF with the ticker symbol SPY. It tracks the S&P 500, the top 500 companies in the world. There are many types, for example stocks, as you can see, bonds. There are also commodities, for example gold, silver, stuff like that, and also currencies. ETFs have a price that allows it to be bought and sold. For example, the SPY has a price of $300. This is the chart of the ETF. In this case, considering it tracks the S&P 500, grows 8% every year on average. Also, it offers lower commissions than normal stocks. And in a nutshell, you can remember that you buy all 500 companies listed in the S&P 500 all in one, thanks to the ETF. It is a collection, as I said, of more companies. Another one is the QQQ Top 500 Technology. It tracks the Nasdaq index. If the index goes up, the ETF goes up the same amount usually. ETFs are obviously good for diversification, as there are many companies in them. They may pay dividends, usually they pay them. This helps with the compounding effect. Usually dividends in this case are invested and helps a lot. Also, Buffett suggests investing in safe ETFs if you don't know how to invest in stocks, because they can guarantee a safe return. If you want something easy, invest $300 every month in the SPY and you should be a millionaire in 39 years. So yeah, this is a good way to make money if your achievement is only becoming a millionaire. Of course, this is not what I want. I aim for more. But yeah, if you just don't know what you're doing while you're gaining experience, ETFs are great.